Howdy, I'm going to help you figure out how to do a Roth conversion into TurboTax software, and this may be applicable to other software as well. I'm using the download version, so it looks a little bit different than the online version, but it should be more or less the same process. I already made a video about how to do a backdoor Roth IRA, but that was a very simple example. This is going to be one where you're kind of doing it over multiple years. It would be easier to show you what I'm going to do rather than explain it. But essentially, to give you kind of an overview, if you contribute to a traditional IRA in 1 year and then you actually do the conversion in another year, that leads to a little bit more complications. And I'm going to show you how you deal with that. Since I'm going to be using the 2024 tax return software, we are going to need to have a little bit of imagination here. I'm going to do 2024, and then we're going to pretend like I have the 2025 software already available. And then I'm going to show you how you would actually put it in once 2025 comes along as well. So if you don't have any imagination, then this is probably going to be a little bit more difficult for you. So working on 2024, the first thing you want to do is go to deductions and credits, and it's going to be pretty simple for 2024 year. This is like, for example, you put money into the account in 2025, but you allocate it to 2024. That's how we're going to put this in here. As you can see here, we're just going to put the limit for 7,000. We're going to say all of it. Did you change your mind? No. You're covered by a retirement plan at work. We're just going to say yes to this. And for our purposes for this year, we're just going to say that this is the first time you ever contributed to an IRA and there's no other balance. So we're just going to say no to that. And you're going to get a zero deduction. That's exactly how it's supposed to look. It's no deduction. And then once you do that, you should be done for the 2024 year. Now, another thing to consider is that this should more or less apply unless tax laws change to any year that you're doing this. I'm using 2024, 2025 as the example, but if you're doing a 2025 and 2026 tax return, it should still apply more or less the same. Now, one reason that I am using the download version of TurboTax is so I can actually look at the return and then show you what's going on with the return. As you can see here, it shows on the 8606 non-deductible IRAs, you'll show the 7,000 that you put there. If you use the same software, it should automatically carry this amount over. Now I'm going to pretend like it's 2026 and I'm filing my 2025 tax return. And once again, you want to go to the deductions and credits. This is the year that the actual conversion occurred. I'm also going to put it in as if you put an additional $7,000 in the 2025 year, in addition to the already 7,000 you put in that was allocated in 2024, even though it was done in 2025. You're going to answer these questions according to your situation, but I'm going to say no to that. In this particular circumstance, we're going to say that none of it was done in this time frame. In this situation, this would be 2026, but it's going to say 2025 because I don't have the 2025 software. This is very important to understand. This is not a recharacterization. It is a conversion. They are not the same thing. So you'll say no. In this situation, I'm just going to say yes. You might not get this question. You answer this question according to your situation, and I'm going to say no. If this was your 2025 tax return, this number would say 2024, and you would just type in the amount that you put in 2024, just, or at least that was allocated to that year. During this time period, 2024, December 31st, if this is your first time doing this, then the basis might have been actually zero at this point in time, but to get the software to do what you wanted to do, just put 7,000 there. Your deduction will be zero. Now, upon looking at this, you should see that there's a total basis from 2024 in earlier years, when in this case it would be 2025 in earlier years, of $14,000. Assuming that you did both conversions at once, you should get it 11099R. I'm going to put it in as 11099R, but if you got two for this because you did multiple conversions of that, then you just put them in accordingly. And and it's going to tell you that. This is not related to what we're doing now. We'll just say no to that. We're going to say you did not inherit it. And you got to be careful about how you read this question. This is asking if you move money to another qualified retirement account. You want to say yes, and you did converting, and you converted it to a Roth IRA. In this situation, we did $14,000, and you're going to say no to that, and we're going to say no to that. This is going to ask some of the questions that they already asked in the deductions and credit section, but there will still be some that's not. That 7,000 is pulled in already. In the scenario that we're giving, this would say 2025. If you did the conversion during the year, if you have pre-tax IRAs, such as the ones mentioned here, and they have pre-tax contributions to that, that can affect the taxability of this conversion. So you want to consider that and plan accordingly. One thing that you may be able to do is say, for example, for traditional IRA, roll that over to a 401k. Now, since that's done, what I want to do is actually take a look at everything to make sure it looks good. And if there's any changes we need to make, I will make the changes. So first thing I like to look at is right here. Right off the bat, we know it's not taxable, so that's good. Another thing you want to make sure is that this doesn't say rollover. I've seen situations where even tax professionals where they will put it in, they won't do it properly, and then this will say rollover here. And unless you have a rollover during that year of an IRA that is unrelated to this transaction, then it might say rollover there. But if this is the only IRA related transaction you had during the year, the only distribution that you had, a conversion, then it should not say rollover here. That's very important. Now, let's go to the 8606. The 8606, everything looks good here. And right here, we're looking at this, and this shows the basis right here, 14,000. And then you have this amount here at the top. This is the amount that we converted. None of it is taxable. You want to make sure it's in this section, because if it's not, this section is blank and it says rollover on the other section, then you, or if you're going to a tax professional, they did something wrong. Okay. If you have any questions, concerns, or you have anything that you think I said incorrectly, please leave it in the comment section below respectfully. Anyway, goodbye.